Good morning, everyone. Welcome to Windsor Brokers live daily market outlook session for Tuesday, 28th of August 2011, 2012. Today's highlights, basically, the most of the majors are in a sort of a corrective mode with the latest 1 month euros rally. Seems to be like running out of steam and losing momentum as the most of the support was coming from expectations of ECB's action that would be trigger for a further recovery and prevent the pair from further sliding and approaching a dangerous 120 zone. So far, 126 level offered quite good resistance, and the pair is for the third day sliding with loss of overnight loss of 125 psychological support. Now seeing more risk towards the downside, at least regarding the technicals that are still in the near term quite weak and still keep the downside vulnerable. The similar thing is with the sterling as it tests a very important 157.50 support zone. As Germany, as the number one and the strongest economy in the Eurozone, is now discussing, at least the leaders, the German leaders, Conservative Democrat Party, are discussing now possible scenario of what we mentioned yesterday, Brexit, the cutting Greece off the European Union, as they see the problem. They want to handle the problem basically in more pragmatic way, and despite some tough rhetorics from Angela Merkel that still being quite supportive for Greece, this scenario is seems to be now not out of the still on the table, and basically the quite important decisions are to be done very soon, whether the Greece will stay. Yes, they didn't meet their requirements on the bailout agreement, and despite some time that was verbally mentioned and given to them for further improvements, it seems that all these negotiations and the implementation of the austerity plan for Greece is still on the quite shaky ground, and the possibility of Greece leaving the Eurozone is quite high at this point, and we need to follow closely these issues, as of course this could be a quite difficult a moment for the Eurozone in its short-term history, that it will be the first time that one country is leaving, actually. Also, more focus is seen on Friday's Jackson Hole meeting, where the Ben Bernanke will give us his decision and verdict whether the QE3 will be continuing or not, and most likely the impact, the strong impact, will be given to the markets after the meeting, upon the releases of the decisions of the Federal Reserve's big boss. From other important things, yesterday's strong fall on the crude oil, as the Hurricane Isaac is approaching the southern coast of United States, and it's moving basically from tropical storm to the hurricane. The people remember the 7 years ago impact of Hurricane Katrina, that could be expected something quite bad, with the, of course, closure of the most of the refineries in the region would be providing, would be signaling the shortage in the support. However, yesterday's rumors that U.S. might release the strategic petrol reserves pushed the oil price significantly lower, and kept the upside levels, the high at 98.27 on hold for now, as the oil price dipped yesterday as low as $94.40 per barrel. Also, the gold is in a sort of defensive mode in past couple of days, with the 1660 zone so far holding the dips ahead of more significant 1650, 1640 levels. Of course, more of this we're going to see in our technical part that will come in a couple of minutes. A brief look at today's calendar. Already released the German consumer confidence. Unfortunately, there is no figure yet uploaded due to some technical problems. 5.9 was the release, better than expected, and along with the previous month's August release, keeping the Germany's consumer confidence at a high level, and of course giving some more optimistic outlook for the German economy as still being the strongest one in the Eurozone. 7:15 GMT is the Swiss employment level. 4.04 million is forecast compared to 4.05 million of the month of the first quarter. A slight decrease in the second quarter in the Switzerland's employment. From the Eurozone at 8 o'clock GMT private loans for July, we have no forecast written. Minus 0.1% is the forecast versus minus 0.2% of the month of June, while M3 money supply for July is at 3.3%, slightly above 3.2% release of month of June. From US 1300 GMT's S&P Case-Shiller Composite 20 metro areas home price index for June minus 0.25%, slightly better than the previous release at minus 0.7, with the more significant release at 1400 the GMT August consumer confidence that is according to the forecast for today at 64.2, showing a decrease in the consumer confidence after the July's high at 65.9, and Richmond manufacturing index at the same time for August. Of course, lower impact to the markets. Minus 11 is the forecast compared to minus 17. Pardon, the release of month of July. And finally, the technical outlook that most of you are awaiting for. Starting with the single currency, as it remains in the near-term descent of 125.88 peak of last week, posted on last Thursday, with the overnight loss of 125 handle, seeing more weakness ahead of the single currency as the price broke below the 20 days exponential moving average that now started to point lower. So far, 38.2% retracement of the initial rally from 122.54 to 125.88 has been seen, with the more significant support coming just ahead, 124.40 previous high and the 124.30 low of 22nd of August, seen as a near-term break point, which is also reinforced by 55 days exponential moving average, currently standing at 124.49, quite a strong support zone at this point, with the break here seen as a trigger for a stronger weakness. 50% retracement at 124.20, along with the 124.00 as a round figure support, and then we have another 123.80 zone, the previous 2 weeks ago range, consolidation range top, along with the 61.8% retracement. Basically, I would say risk would be seen on loss of initial 124.40-30 zone and the 124.00. That will keep the upside levels intact in favor of a stronger reversal as a corrective part of the larger 1-month rally from 120.42 low of 24th of July 2012. That has so far been capped at 125.88, limited by descending 90 days moving average as shown on the daily chart, with the daily studies still being rather positive and maintaining the positive tone of 120.52. The main risk would be, I would say, seen on loss of 123.80. That will sideline the short-term 1-month bulls and allow for a deeper reversal. Critical short-term support is at 122.40, the higher platform, loss of which would be signal of an end of the corrective action, and the 10 focus down towards 121 and 120.42. Finally, the key short-term support low of 24th of July. The British pound also in the near-term corrective action of 159.11, 23rd of August high with a low of 157.53 seen so far. This also marks, similar to Euro, 38.2% retracement of the latest up leg from 154.89 to 159.11, approaching important support zone, previous high at 157.43. 157.50, 38.2%, that has already been cracked, and 157.43 also the near-term bull trend line of 154.89, a break of which, along with the 157 as a round figure support and the 50% retracement, would be signal of deeper reversal and stronger retracement of the latest rally, as the 4-hour studies are already breaking below their midlines and the hourly ones being in the negative territory, with the near-term price action being limited by descending 20 days exponential moving average that crossed below 55 days one at 158.36 during the last week. More risk is seen in the near term, more risk is seen towards the downside, with the loss of important set 157.50.40 support and 157.00 to allow for a stronger retracement. Daily structure is still positive, as the pair recently broke above 200 days moving average and the 2 months range top at 157.60-70 zone. However, current pullback sees risk, as some of the studies started to point lower, with the loss of 157.50 seen as a trigger for 157.15, the 200 days moving average, and the 157.00, the round figure support and 50% retracement. Of course, loss of which is to bring the pair back into the previous range and the delay. They put the short-term bulls aside and keep the upside intact for now, as the pair rallied to as high as 159.11. That marks approximately 61.8% retracement of the down leg from 163.00 to 152.67. And the dollar yen's recent recovery, near-term recovery of 78.27, last week's low, seems to be losing traction, as 78.80 offers quite good resistance ahead of 79.00, as seen as a psychological barrier and our next upside target, with the subsequent slide lower so far being contained at initial support at 78.44. However, a slide below the a near-term bull trend line of 78.27 indicates possible further weakness, as the hourly studies slid below their midlines and moved into the negative territory, keeping the downside at this point more vulnerable. Loss of 78.44, 78.36 is seen as a trigger for test of a more significant first 78.27 and then 78.15, 78.00. A strong support zone and the base. As the upside so far remains limited, we can see that descending 20 days exponential moving average keeps the upside limited. Above it is just above it, it's at 78.82, the 55 days one, while 79.00 so far stays intact. 79 as 50% retracement and 79.12 as 61.8% retracement of the near-term slide from 79.65 to 78.27 are seen as a trigger for a stronger recovery. Basically, the trigger to turn the focus again towards the upside and prevent the pair of testing important 78 support zone, as the current situation remains quite negative. More focus is seen towards the downside, and as at the loss of 78.44.36 would be quite risky for extension towards 78.15 and 78.00 in the near term. Again, on the upside, the gain of 78.83 yesterday's high and more significant 78.00 12 Fibonacci barriers would sideline the immediate bears in favor of possible revisiting of the tops at 79.52 and 79.65. Daily structure is, I would say, positive to neutral, still more focusing towards the downside as recent false break above 200 days moving average and the sharp slide lower, still holding above the broken bear trend line, but again more focusing towards the downside as a strong support zone and base seen at 78.00 and the low of the slide from 84.17 years peak at 77.65 would easily come in focus in case the pair fails to regain 79.00 and loses 78.44.36 supports. Dollar Swiss near-term recovery remains quite steady. The bounce of 95.37 still holds the upside following a break above yesterday's brief, today's brief congestion at under 96.20. This was the peak of last Friday, with the overnight's break higher, posting slightly higher high at 96.34. The positive tone is still dominating on the hourly chart, while the 4-hour studies are pointing higher and attempting to emerge out of the negative territory, with immediate barrier seen at 96.50 zone, where we have the 55 days exponential moving average that is currently moving from descending towards the sideways movements. And of course, this is a strong barrier, the lower top of 22nd of August at 96.58, along with the 96.51, 50% retracement seen as a break point, because this is also marking the previous lows at 96.54, seen as a break point, clearance of which to confirm the temporary base at 95.37 and allow for a stronger recovery. Negative, as said, the 4-hour chart studies are pointing higher and see potential of a possible retest of 96.50-60 barrier, but clear break here is required to focus upside levels with the next 61.8% retracement at 96.79 and the previous range base at approximately 97 zone seen as the next targets. However, negative tone that dominates on the larger picture as a part of the down move from 99.70 24th of July peak still sees the downside more favored, as long as 97 zone, where we have also the bear trend line currently at 97.10, bear trend line of 99.70 stays intact, but more significant would be a gain of 98.00, lower top, lower platform base, lower platform of beginning of mid-August, pardon. That will give some more strength and signal a possible return to the larger uptrend for extension towards 99.00 and the possible test of 99.70 peak. Otherwise, holding below 97.00 sees a risk of further extension lower, with immediate target seen towards 90 in case of a lower top at any level below 97 sees focus towards 95.00, 50% retracement and round figure support ahead of another important static supports 94.61 and the 94.20, with the 94 zone seen as a very strong support on the daily chart that marks 61.8% retracement of the upleg from 90.41 to 99.70, reinforced by 200 days moving average that currently stands at 93.81. As we mentioned yesterday, the crude oil was dragged sharply lower on the rumors of possible release of strategic petrol reserves, but managed to find some ground at 94.40. That was the low of yesterday, with the near-term price action seeing in a bounce as the price reached levels close to 96.00 barrier. At this point, we have the 55 days exponential moving average, a break of which is seen as a more positive signal for further recovery. However, the near-term action is still skewed towards the downside. The studies remain in the negative territory on the 1-hour chart, and descend off the recent peak at 98.27 that left a lower top at 97.70 yesterday. See still more potential towards the downside. Set 96 zone that marks 50% retracement of the down leg from 97.70 to 94.40, reinforced by 55 days exponential moving average is seen as a quite tough resistance, and a break here would bring some more positive tone and allow for stronger recovery. On the upside, trend line resistance at 97.34 and the break above 97.70 are required to refocus upside levels at 98.27. Otherwise, risk of further slide is not ruled out at this point, as 4-hour chart studies also remain in the negative territory. Current bounce is, I would say, seen corrective as long as previously mentioned levels at 97.30 stay intact. Larger picture studies are basically these studies started to slightly point lower as the oil price unable to clearly break 200 days moving average, and main risks is seen here in case of further failure, as yesterday's close has been seen below the 200 days moving average. Possibility of further corrective action is quite high at this point. 23.6 Fibonacci retracement on daily chart at 93.31, as well as previous high seen as a first strong support, and break here I would say would be signal for some stronger corrective action. Back to the hourly chart, immediate support at 95.12, 95.00, ahead of more significant yesterday's low at 94.40, loss of which would be seen as a trigger for a further reversal, as this is seen also as a break point. We have the previous high at 94.69 that hasn't been clearly taken out, so break point seen at this level. Further weakness through 94.40 to open 94.00 zone. 93.93 is the 38.2% Fibonacci retracement. As said, near-term price action is still in the negative territory and sees more potential towards the downside, with the break above the clear break above 96 and 96.50, I would say, required to avert immediate downside risk. And finally, gold, it's still in the defensive mode of its recent peak at 1676.90 posted yesterday. Mild correction, still downside held so far, but by 1657, just ahead of 23.6 Fibonacci retracement, with more significant support zone seen between 1650 and 1640, where we have the previous consolidation top range top at 1644. 1643 is the 38.2% retracement, and the 55 days moving average. Ideally, any further dips should reverse at or above these points in order to keep the immediate bullish structure in play. The 4-hour studies are now pointing lower, with attempt to build the base at 1657 seen so far, but clearance of immediate dynamic barrier 1662 to 20 days exponential moving average seen as a trigger for a further extension higher. Any losses below 1640 would be targeting next significant support 1633, which is low of 22nd of August, also 50% retracement. This also marks one of the previous tops posted in July, 1628, 1633, and basically loss of these levels would risk further slide. Of course, more focus seen on the Friday's Bernanke's speech that will give us a much more clear picture of the further movements, especially the US dollar. That will be, of course, indicator for the all opposite instruments such as gold. So far, the positive tone dominates and keeps the upside favored as daily structure, despite being in the overbought, currently emerging out of overbought territory, so far seen as a corrective, with 1643 also been 200 days moving average, reinforcing the previously mentioned support. And I would say main risk would be seen on loss of 1640. That will be signal for some stronger corrective action following the latest strong rally that broke above very important barriers and range tops at 1620, 1640 zone, turning focus towards 1690 and 1700 levels, with the short-term focus still seen more towards the upside. That was all for today from me. Now it's your turn to submit your questions, please. Okay, we have a question for the Aussie dollar. It's been a few days not to talk about this instrument. Okay, starting with the daily structure, after peaking at 106.12 on 9th of August, the pair remains in the defensive mode with the 23.6% Fibonacci retracement of the rally from 95.79 to 106.12 seen so far, with the studies being negative and the loss of momentum on the daily chart, seeing more potential towards the downside. Loss of important supports at 105.00 and 104.40, with 103.40, also 104.00, with 103.44 seen so far, sees the immediate risk of testing 200 days moving average at 103.00. That also marks the round figure support, and basically break below this level would signal some stronger corrective action of this short-term rally, 2 months, nearly 3 months rally, 2 months actually rally from 1st of June 2012 to now 106.12, 9th of August 2012 peak. Lower time frames, negative tone on the hourly chart, with some brief corrective actions seen so far, and not that serious, as brief bounce higher reached only 103.75 of 103.44. I would say keeping the downside firmly in focus, and unless a minimum 104.25 is regained, nothing significant to be expected of the current brief corrective action. 4-hour chart studies are also negative and quite extended at this point, as the pair retraces approximately 61.8% retracement of the upleg from 101.75 to 106.12, where the temporary support was found, with again 104.25 seen as a trigger for some stronger recovery. Otherwise, lower top and fresh weakness would be seen as a likely scenario in the near term, with the 103 zone a strong support, also 200 days moving average seen as a near-term target. Any further questions? Okay, if not, then As usual, I would like to thank you all for being with us and attending our live sessions. Any suggestions, feedbacks, comments, please to be submitted on my email. I get already some good feedbacks and some suggestions, so we're trying to design something that will be the most suitable for you. Again, thank you everyone for attending our sessions. We are back tomorrow morning at the same time at 10:00 local Cyprus time or 7 o'clock GMT. Until then, as always, wish you a very nice day and very successful and profitable trading. Good luck.